The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour, a special British exit version of the Power Trading Hour. As always, we love to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
2104 on the S&P cash, 1.9 billion shares, a little bit ahead of yesterday. But again, I'm not expecting a lot of volume until this next coming week. There's a few earnings coming out next week, Wednesday, Thursday, next week, Tuesday, Wednesday, Thursday. But nothing that probably is a big enough market mover on its own. So we'll have that a little bit. Of course, we also need to look at what else is going to happen next week. When we get into next week, the last 2 days of the month are showing up. So that's Wednesday and Thursday. So we have fun buying basically just a couple of days away. And that's going to tell us a great deal. For the last few months, we've had U.S. funds have outflows. At the same time, we've had a lot of cash coming from foreign soil to the United States to make up that difference. Tonight, we'll probably put a stamp, either true or false, on whether or not that was a wise decision by those in other countries. My thought has been all along that if anybody gave it actually any decent thought that the British should leave the EU, I read a lot of pro and con on it, and basically the pro that they should stay is that you're retired and they'll come after your retirement, so you better go in there and vote stay. For the leave camp, we are getting royally screwed, and if you're not going to just be a parasite on the government's dole, if you're not part of the problem, then you probably want to vote leave. I did like one more. I saw one more debate on it last night on YouTube that ran, I guess it was live yesterday at noon in London. I really liked the leave candidate, the guy that's running the show for leave. I also like that he's called this today Independence Day. And I have to say that I think the best thing for them would be if they left. I suspect that if they leave, you will see that things actually improve rather quickly in England. And all the naysayers probably proved wrong. If they stay, I suspect we're rallying a bit. If they leave, I suspect that maybe we pull back a little bit. And after all the henny pennies that are running around saying that the sky is going to fall, that the dead will rise from their grave, that dogs will start living with cats, that we will find out that it has all been a scare tactic by the extreme far fascists of Brussels, who have pretty much been able to corrupt everyone in the UK and screw them over, other than the people that rely on those government checks coming to them every month. That's about it. I can't imagine that almost the people that have the leave market have taken everything that the stay camp has said, dissected it, and tore it to shreds. There aren't a lot of reasons to stay unless you are an MP and getting huge amounts of kickbacks from Brussels, and or you're, like I said, part of the problem. So to me, a great day for democracy, hopefully in the UK, maybe their Independence Day, and even a great day here in the United States where we found out through the Supreme Court that we do not have a king, that there is the separation of powers, that one man does not rule. And of course, as we've always known, total power corrupts totally. And the desire to be a king, to believe that you know more than the market or know more than your subjects is amazing. But it does occur, and occurs often. But almost a kind of a mini Independence Day here in the United States too. And that is that the rule of law and separation of powers does continue, even though it's assaulted and molested on a daily basis. What do we have going on out here? Well, let's get started. Like we said, up 20 points in the S&P cash volume, and just under 2 billion shares. So volume is light. I suspect that this is kind of how we were going to close. I think I said in my newsletter either Monday or Tuesday that we were just going to home in into this 2100, and at that point, we'll find out what they actually say tonight. We got more to talk about in that part too, but let's just start off with a little bit of history.
That it's all just a little bit of history repeating.
It is history repeating. 1836, with the U.S. national debt eliminated for the first time in 1835, the federal budget is running a huge surplus. President Andrew Jackson's plan to distribute the surplus to the states is enacted. Jackson repeatedly declares that there will be no more national debt. The U.S. will always have a budget surplus. Well, that lasted all of 5 years before we started running debts again. Of course, there is no end to the amount of people that have no idea where the cash actually comes from. But of course, there are people with guns that will come to your house, and that tells you exactly where the cash comes from. I never hear, well, we've got to give money to this. We've got to go give money to that. And of course, there's always the opposite side of that, and that is that there is somebody willing to put a gun in your face to have others give that cash away. But just a thought today. But of course, no one ever believes that. It's the money just comes from heaven. It's just printed. There's no reason that we can't just have infinite amounts of money. And you know, if you got a problem, we'll just buy you a house on the beach. Everybody deserves everything. There's no reason to have any kind of merit-based system in the United States. That's me being sarcastic today. I should be more pro there, shouldn't I? Since we have had, and this is going to be Independence Day too. At least I'm looking at it that way. Talking about Independence Day, here is the chart that tells you exactly what's going on. Talked about this yesterday. I won't belabor the point other than midnight, you have 80%. Maybe we'll have a result. Maybe we will not. But by 2 a.m., it will be in. It will be done. The die will be cast. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yesterday, I got an email that was late in the day. I got it after the show, actually, but he sent it before. Two questions. Would you mind looking at FSLR? And yes, I will look at it. But the question is there an entry point in it? As I've said, all these stocks are frauds in the solar business. They do not have a path to prosperity, actually making money. And in fact, of course, the last, or a great deal of the last of the money that is in these companies is going away this year. There is going to be a little bit more in a separate bill, but it is nothing, and it pales compared to the amount of assistance these companies were getting in the past. I don't think that there's much here. And of course, Solar City blowing up over the last few days has pretty much torn away the veil that any of these companies are actually money-making entities. Yes, they were able to make money when they got green checks from the government. But guess what? They never made it to prosperity or a money-making company. I did see a fairly decent, good analysis of the cash flow of Solar City, and they're losing. They've got $2.1 billion going out this next calendar year, more than they have coming in. So $1 billion here, $1 billion there. Soon you're talking real money. I don't think that there's any difference, a dime's worth of difference between all these solar companies when you actually have solar cells that are competitive with natural gas produced electricity or even nuclear power produced electricity. Give me a ring. Probably the best argument against solar power was made by The Economist magazine, and that is, since there is no way to affordably store solar power, you always still have to build a power system that has just as much output as you would ever need if there was a cloudy day. And so basically you're buying two power generators when you only need to buy one. and you're buying one at 4 times the cost that it would be for the other one. I just, maybe there's something new coming out, but my guess is this will be incrementally better. Eventually, they will get there and have a product that is competitive with natural gas produced electricity. But to this point, they do not. It does not look close. And I know there are a lot of pie in the sky articles out there, and everybody wants to wish these higher. My guess, though, is these will be on the ash heap like Solar City will be soon. The other question was for VLO. This, I would have a much better idea of thinking that you have a buy on this one. The buy would come in on any close below, back above the February 8th low. That would have been 52.55 with 11 million shares. What do we have the close as yesterday? 52.81. So yesterday would have been a move back into the trading range. You never got more than the 11 million shares. You had 8.1. I tend to look for stocks, and when we go through the ones that I normally look at, you'll notice that the volume is somewhere around maybe 40% or even 50% less than previous lows, and that's what I like. 8.1 is not bad, but the buy would have been the close as this went back into the trading range yesterday. So I probably should have been back on this one a little earlier with you, but here you are. You have got the confirmation today. There's light volume. Could you have a pullback? I think the answer is yes. One of the other reasons why I probably wouldn't buy this one would be that the energy on the way up is about the same as the energy on the way down. I like to have stocks that have a whole lot less energy on the way back down, and normally what I'm in. Okay, you can email me just like Mike did at path@tfnn.com. You can call me. And of course, this is going to be a quiet day. So if you have a big, wide, sprawling question, this is a beautiful day to give me a call at 877-927-6648. And of course, you can always put a message in the den. The way the market is around, do you think tomorrow could be sell the news, Dave, baked in? I don't think anything's baked in. I think we were talking in the den here a little bit before, and probably the guy that's nailed the last 3 or 4 elections, Nate Silver, he is a central figure in Moneyball, spent a lot of time and effort. First of all, I will give you the warning about statistics, and that is a warning from Nassim Taleb. That is, statistics are right about 75% of the time. The other 25% of the time, they're definitely wrong, and way off wrong. And that is one of the reasons why you have the 100-year flood every 30 years when it comes to insurance companies, and they go bust. If their statistics were always correct, you would never see insurance companies go bust, but they do, and they do regularly, and they do about every 30 years because there's always the unknown, but statistics are generally that. Nassim has some papers called the fourth wave, the fourth quadrangle, the fourth something. He has it set up that they are wrong at least 25% of the time. I'm thinking it's actually more of about, with human error, about a third of the time. But he's got a great technical article about why statistics are wrong. The other thing is why you are wrong. And that's why I can't put a lot of money in either side of this. I'm going to react and not predict how the vote comes out. Because in huge, very political polls, even in exit polls, people lie, and they lie a great deal. Nate Silver, over the last 6 to 9 months, has had to do a bunch of mea culpas. He's been 100% wrong on Donald Trump's ascension to the Republican presumptive candidate. And why, I don't know if it's in the article I posted in the den, But as a pollster who's been literally within a percent being right on many of the previous elections, hasn't been right at all this year on both sides of the aisle. I don't know if it's in that article, but he's basically saying that there is so much political correctness now that a lot of people are answering the question the way that you think or they think you want it answered. And therefore, almost all of his predictions have been wrong. Normally, if you ask a question like, do you like blue more than red, you're going to get a correct answer. No one's going to try to shade the truth. If you are asking about a political candidate and you get a hint that they prefer one or the other, apparently that is a big thing this year. People are answering the way that they think the pollsters want you to answer. Therefore, pretty much all the polls have been nothing but crap. I suspect that's exactly the same thing that could be happening in England. The latest polls that I looked at that seemed to be good said it was still within the margin of error. I'm not going to predict. I will react and probably be up late tonight with the rest of you. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And a little continuing discussion about statistics and how we can project political votes. The more emotional it gets, generally, the more statistics gets wrong for a variety of reasons. The one that I outlined is basically called the Wilder effect. i.e., they don't want to be on what even though they're going to vote a different way, if they believe that the person asking the question has a belief that might put them in a bad light if they answer the wrong way, they will answer the way that people asking the questions do. And there's a great deal about how you ask the question, especially politically, that gets you an answer. So that's why I'm saying that I have no idea. There are also a lot of reasons to skew bets. They're talking about that in the den, the size of the bets. But one of the other problems comes from if you're betting, you're probably, I bet you could also put statistics on how many people that are betting on this live in a big city. And my guess is that traditionally you'll see the same thing. That is that big cities, you're 4 or 5 times more likely to buy a lottery ticket in the United States if you live in a big city than if you live in a small, rural, less than 100,000 sized town. I think you can put an effort to that. And since everybody that's betting tends to be in a big city, they tend to have their views reinforced by others in that big city. In fact, better decisions come from people that are very diverse, not in the same place. One of the reasons why I don't put a lot of weight in decisions made by people in New York, if they all have the same kids going to the same school, doing the same thing, seeing the same place, you're not going to have a very good, diverse decision-making pool. And one of the reasons we have an edge on the people on Wall Street, that is that we don't all live in the same place. We don't all go to the same schools. We don't see all the same issues, and why we have states. They were pretty smart when they put this country together. They knew that states would be bullied by other states that maybe were larger. So each of us get 2 senators to kind of make up for that bullying by larger states sometimes that might try to impose their will on us. But just a thought. There are a lot of reasons why I will not put money ahead of this. Although I had one of my subscribers actually say they're having the best day that they had in 8 years today. I don't know if that's true or why that would be it, but interesting take on it. That's it. We are having a good day. In the longer term newsletter, short term, I don't want to be in anything that could blow back on me. What else do we have going on out here? A lot of stocks moving today, so we'll take a look at that. APOG. Nice little gap up in Apogee, APOG, making a little kind of a dragonfly candle out here. Is that the opposite? I'm looking forward to Steve Rhodes' interview tomorrow with Steve Nissen. I read all the books originally early on, and it's amazing. One of the quotes that I take from one of our other guests that was around early in the 2000 timeframe was that if you can program it, it's probably going away. But I had a program that I wrote for myself that looked at candlesticks. And each year you could see how the candlesticks performed a little less well than they had before. After there was several packages that came out that you could drop into all the different charting software to tell you what the candles did. Man, they work very well for a number of years until everybody figured out that you could program them. They still work well, but certainly nothing like they worked probably from about 1998 to 2003. But who was that? Joe DiNapoli. He said if you could program it, it probably will go away in the market because others will be able to program it too. And I think there was a lot of that. But I still look at candlesticks every day just because, to me, they are much easier than bars to see what's going on in the day. I can look at it and absolutely know visually much better than I can on other things. They just stand out to me much better than trying to look for some tiny little tick somewhere on the side of the chart. Anyway, nice little pop-up today, certainly with a nice volume up to 45 bucks. And a little candle out here at the top. I don't know how, this looks like a bad tick to me, but nice little pop-up here. Looks to me like the next stop is going to be around this $46 level. It did test the previous high on 1/3 the volume and had a fairly decent pullback, even some volume into the downside tomorrow before the pop-up today. Bed Bath & Below didn't look very good earlier in the day. Has since recovered a great deal. A ton of volume, though, that has blown through all the previous lows in this $41 range. My guess is that this is probably going to build a little bit more power by the end of the summer and break through this $41 range, probably gap through it. At least the energy is starting to come off. If you wanted to be bullish on this, I don't think I would be wanting to try to short this one down here. But maybe it goes up on even lighter volume, and then maybe you'd have a better place to actually put on a short. What else do we have out? Miller Herman. Many people don't know this company, but they make desks and chairs. I like this one as a canary in the coal mine stock because when these guys are doing well, you can pretty much bet that corporate United States is selling a great deal more chairs. Them and Steelcase are kind of a great read on what corporate America is doing. Anyway, they make those wonderful chairs. Nice big volume day out here. You want this thing to continue to close over the next couple of days over $32.71. Little of this was heavily shorted, was about short sales in this stock. And let's see what else we have out here. Red Hat is buying somebody, and I don't think they liked it that much, although this one has been another one that has recovered a great deal today. Nice pop back up off this area, about 75 bucks now, around 78. But again, pretty huge volume. You don't like to see that in a down day. I don't know if there's anything more you can say about it. Just checking the email. Wanted me to look at Solar City real quick. As I said yesterday, pretty bad sign that you're getting bought out, and by the end of the day, you've given up all the bounce out of that on heavy volume today, a little lighter volume. I'll take a good look at Tesla here at TSLA. Again, to see how this is wrapping up after the news yesterday. Even lower today, a little less volume. My guess is that this will go the way of the dodo. We will not hear much about Tesla buying out Solar City after a few weeks after they let it fade. Give me a call, 877-927-6648, because I'm in the market for you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
A question in the den, it wasn't for me, but we did talk about the possibility of having a nice 3-gap play set up in some of these banks. So we'll look at a few more of these. But what do we have here? You've got a nice 3-gap play up in Deutsche Bank. Not a bad setup. I know this is an ADR. I know there are gaps out here for currency. But my software automatically figures that out. If you'll notice, every gap is not actually presented on these charts, just the very big ones. And I think I don't see any evidence that doesn't say that 3 gaps have to do with the stock or the currency gaps work any different than that. So maybe it'll be something I test out. I do kind of like the thought that if you were going to be short something, now that these things have come off their lows and bounced to these highs, if you had to buy something and go short, I could see worse stocks out here to do that in. Personally, I don't short stocks below $30, so this would be off my list for that one reason alone. I'd much rather have an option on something that is this price, but my guess is that the option prices are probably pretty high already. Again, going back to my theory that, you know what? I would just rather react than try to anticipate tonight's move, and if we get one. My guess is that if they leave, we'll have a couple of days down, and it's a buying opportunity. If they stay, then maybe it is a selling opportunity if you are long. But that's just my thoughts at the moment. Your mileage may vary. Let's look at a few other stocks that are moving out here. What do we have? Windstream Holdings, very nice light volume. I wanted to see how this was reacting today. I do like the as a short or as a topping signal. I wouldn't short a $9 stock either. As a shorting opportunity or sell signal, May 4th, $9.47, 4.3 million shares. What else do we have? You know, you tested it with 2.1 million shares, came right back into the trading range out here. Light volume out today, but certainly from the May 4th high down to this May 19th low, and then the May 19th low to the June 22nd high, energy was off by 25%. So this is not actually giving a ringing endorsement on either the energy off the low or the high, the volume at the high. So both of those could tell you something out here. We've been watching this one for a while. The advisory board this one kind of looks very interesting to me. I'm going to have to find out more about it. But you've got a monster high volume low. We have a stock that's above $35. It's got a doji today out here. Just about everything I like in that it's gone back, filled this gap. Energy is really kind of wound down to almost nothing as it's gotten back up to this level. We'll see if we've got an earnings date coming up. Maybe it's just hanging out here waiting for its earnings day. August 2nd, no. So you got some time out here before earnings. So this may be a very interesting one. If things look like they're going south, I'll take a look at another stock that looks like maybe it's got a sell signal on it is the test of this spike of April 27th on ACCO brands. 1.7 million shares into it with a high of 1 million shares, actually just 400,000 shares today. So not much going on that one. I'd have to be out of it if I was long. ARMS Holdings, a very interesting setup on this one today in that it did go higher. It's gone higher than the last big high volume high, which is February 3rd. Had 3.6 million shares, $44.61. You would think that this one would kind of trade with Apple, and it seems to me actually even a little bit stronger than Apple on what's going on. Kind of interesting to see those kind of moves, and we'll look at Apple next. But certainly, 50% of the volume out here. You did have a nice gap with energy on the 20th that had 4 million shares. But as we've gotten to these previous highs that had 1 million shares on April 11th, you got a little bit more than that. But this thing continues to go higher on lighter volume. Also makes me think that you could have on some bad news in the market, you could have a fairly rapid pullback into this $42, $43 range where support is. I'd be much more interested in buying a pullback on that than actually buying this breakout, even if volume did pick up. Now let's take a look at another one. Fibrocellulose, FBR. Been looking at a few of these companies that have been making lows on the possibility of buying good news in the market. Kind of like this one out here today. He's making some decent signals that maybe it's found a low. April 11th, 2.2 million shares, $7.82. And of course, yesterday he had 1 million shares as it went lower. Got kind of a little doji out here today on a little less than 800,000 shares. Your high volume day actually came in on the 16th of June, and that was the 1.6 million shares. And it's just kind of drifted out here a little lower. I would have liked to seen lighter energy coming off that June 2nd high. That would tell me that this one may need to consolidate a little, even if the light volume persists. Much less chance of a V bottom than a U bottom on that one. LAD, Lithium Motors, actually was looking at this one, hoping that it would come up with a lighter volume. I do like this one, and one of the reasons why I like it a little bit better, it is one of the ones that's had very light energy off the last high, which is April 28th. It's kind of meandered down here slower with not a whole lot of energy. One thing you have to kind of dislike was that while it did test the previous low on a lighter volume, it wasn't that much lighter volume. Also makes me think that maybe Lithium Motors, LAD, might have a little bit of consolidation in it, maybe even a piercing of those lows and a pop back into the trading range before that lines up for a possible play. McCormick. We talked about that the other day. Another one that is breaking out on light volume. These ones that have not had significant volume have, within a day or two, pulled back into the trading range. We will see tomorrow if this one can get some juice. Right now, no sign of strength. 2.2 million shares on April 4th, $100.91, 2.2 million shares. As always, I'm in the market for you. We'll play that when we come back and look at a few other stocks. You still have plenty of time to give me an email at path@tfnn.com. Call me at 877-927-6648 or post a message in the den. Another question is HP a short for you? Well, guess what? We'll have to make you wait. We'll answer that question on the opposite side of this break. That's what they...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And a question about whether or not I would short HP. And as I said before, I do not short stocks under $30. So that would be the first thing. If I was going to short it or thought that I wanted to short it, I would, of course, be using options to limit my risk. There are a lot of reasons why. The other thing is that generally I don't go against probably one of the best 2 or 3 CEOs in the business. And certainly Meg Whitman is an absolute beast when it comes to working companies out. She's been able to divide and conquer in HP so far. This is the printing segment and some of the other ones. But I just, I don't see a great deal out here in this right now. In fact, I would say that maybe at 12.25 you could go long. So I'm not feeling the downside in HP itself. So I don't know. I just don't see it. Maybe there's something there, maybe not. Just wouldn't be a short for me. Nutrisystems. I talk about this occasionally. I had some people email me. I talk about a Wyckoff pattern. A lot of the early work that was done on price and volume was done by a gentleman named Richard Wyckoff. He had a pattern that he said was the one to buy. We do many patterns here at TFNN, but probably the one that you really like, or the one I really like, is this standard Wyckoff pattern. It seems a little easier for me to figure out. It is a little less interpretation, a little less Rorschach test, and it starts with this: a nice sign of strength, a bounce with a volume, which you have on the 4th of May. You did so with 1.8 million shares. It goes to a higher high, volume's a little lighter, May 26th, and then it nicely meanders back down on very light volume to fill that big gap that had 1.8 million shares. What do we have the last 3 days? 164,000, yesterday 196,000, today 127,000. Maybe we get back a little bit, but tomorrow, if this would kind of come down in that low 23s, I would kind of look at this one and have to say, you know what? This is not a bad-looking Wyckoff pattern. I dislike the seasonality. Normally, fall and into Christmas is when you really want to own these stocks, and they tend to perform better. That would be the downside on it. SLM is got a nice little light volume low out here. Energy did decline slightly, not enough to me jump all over it, but kind of interesting low in this one yesterday. $6.11, 7.2 million shares. You know, and then you got into that yesterday with 3.9 million shares. Even the big candle down day, 5.2 million shares on the 14th was less. So you kind of come back down here. You've got kind of light volume out here. Energy did decline on the last leg down. So there are a few things out here that look interesting. Not a great deal, but a few. And as we go into the home stretch, as we heard in the previous hour, Steve Rhodes is having Steve Nissen on, that wrote the Candlestick books. I look forward to that tomorrow. Check that out at 2 o'clock. Of course, this is a Thursday, so we have a wonderful lineup coming up with Tom O'Brien in the next 2 hours, with Andy talking to him, and then Andy, all solo, mano a mano. Well, actually, just mono in the 5 o'clock hour. Sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.